Hey, good morning. It is 8:05 a.m. Central Time on Tuesday, August 29th, 2023, and let's jump right into our trade planning exercise for today. Now, heading into the open today, our intermediate term bias continues to be bearish and our short-term bias is neutral. And anytime our short-term bias is neutral, we need to be much more mindful of the real-time intraday situation, and we need to take the intraday pattern into account before making any trading decisions. That being said, we can prepare for certain trade ideas and then make adjustments based on the real-time information. So on the upside, we're using 47 to 55 as the initial resistance zone, and we will need to see broad market strength and sustained upside momentum in order to get a sustainable breakout above initial resistance. So there is a potential short at 47 to 55, but it will depend on how the market is shaping up in the moment. So we will go ahead and set up a short there, and if sellers do indeed step in at initial resistance, there will be potential for a move down towards the overnight low as well as yesterday's low. So we're going to go ahead and set the high probability target to initial support at 25 quarter, and the final target is going to be 16.5. Now these targets may get adjusted as we set up potential longs below, and of course the targets may be adjusted based on the level of weakness that we're seeing in real time. So for now, we'll leave this as a short entry at 48.75, looking for a move down into initial support, and the intraday bias confirming zone at 44.10.5 to 16.5. Now if we get a breakout above 47 to 55, then our intraday bias would become bullish, and there would be potential to expand the range into 44.64 to 70 and 44.75 half to 85 half. So what I'm going to do is make a copy of the zone and also set up a long at 47 to 55 in the event that we break above it and then pull back into that zone. I would expect it to then act as support. So I can plan for that in advance as well. And on the upside, the high probability target would be around 44.68 or so. And in this case, I'm going to set the final target to 75 half. So you can see that we would need to get an entry at 53 half on the long side to get 2R into the resistance areas above, and we would need 51 quarter to get 3R. And the benefit of 51 quarter is that even if we get out at 68 half and exit the entire position there, we're still getting 2.74R. So let's see what price would give that to us if we only target 68 half. So the aggressive price would be 52.75. So that would make for a relatively good entry on the long side in the event that we get a breakout above 47 to 55. So for now, we'll leave this at 51 quarter and we'll leave the final target at 75 half. On the downside, we're using 19 quarter to 25 quarter as initial support. And if the market is going to maintain the strength from yesterday, then ideally we hold above initial support. So that is a potential long setup, first time down. And then below that, we're using 10 half to 16 half as the intraday bias confirming zone. So that's the area that sellers would need to take out in order for us to get an intraday bearish confirmation. And in the event that initial support or the 10 half to 16 half area holds, there would be potential for a move back up into the overnight range. So our high probability target is going to be the overnight low at 33 quarter, and our final in this case can be the 47 resistance, the initial resistance zone. So 22 half would give us 3R at initial support, and 15.75 would give us 3R off the intraday bias confirming zone. I'm also going to set up a copy of that initial support zone and see what it looks like if I daisy chain these two zones. So I'm going to set the stop at 15 half. The entry on the next one is 15.75. So an entry at 20 quarter with stop at 15 half would be the conservative way to execute at initial support. So on the downside, these are potential long ideas, and I'm also going to make a copy of the intraday bias confirming zone and set up a short in the event that we break below that area and then retrace back into it. So in that case, I would want my stop to actually be not just above 16.5, but I'd want it to be a little bit above the 19.75 high volume node. So this just shows me that if I get an entry at 14.75 following a break of 10.5 to 16.5, then a move into 43.95 would give me 3R with my stop at 44.20. So this is just in preparation in the event that we get a breakdown below 44.10.5 to 16.5. And making a copy of a support zone and then using it as resistance in advance is a safer way to execute a breakdown idea. Whereas if I shorted a break below 44.10.5 at 44.10, that would be much more aggressive, and it would only make sense to do that if we were seeing excess weakness and big and sustained downside momentum. So if that were to shape up, then I would execute it as a intraday balance breakdown setup. And in that situation, you can see that I would need a much bigger move to really get any decent risk reward out of it. So you can see if we enter at 10 using the volatility stop, we only get 1.5R into 43.95. So that would be a riskier way to trade the idea because I simply don't have the upside potential on shorting 44.10. And this is an interesting thing to look at because it tells us that the reward potential for short sellers on a break below 44.10 is not really all that significant. So that might give you extra confidence to perhaps take a zone fade and buy the 44.10.5 to 16.5 area on first test, or at the very minimum, having this clarity can at least tell you that you don't want to enter short at 44.10. In order to get at least 2R into 43.95, we would need to get an entry at 15, and in this case, we're going to lower our stop to just 20.75. So if we can get an entry at 14 quarter, that would perhaps give us at least 2.5R, but an entry at 44.10 would be poor trade location. Now, in the event that we do get a successful breakdown below 44.10.5, unless we are selling off on big downside momentum with a pickup in volume, the day's range potential may get used up by the time the market reaches 43.88 to 95. So we can consider buying this on first test, but only for a tradable reaction. So we're not necessarily looking for a reversal if the market goes down there. We're only going to look for perhaps a bounce back up towards the 44.10 area. So in this case, I'm going to set my high probability to 44.09 and the final there as well. So a long at 91.75 has 3R potential, and 93.5 would give me 2R. And the lower the market pushes, the higher the odds of buyers stepping in. And on the downside, we have the range extreme at 43.65 quarter to 75 quarter. So that would essentially be an automatic long in 90% of situations. As long as the market is not testing that area in the last 30 minutes of the day, I think it would be a very good buying opportunity at 43.65 quarter to 75 quarter. But at the same time, I think it's very unlikely that the market goes all the way down there. But in case it does go down there, I think it would make for a good buying opportunity. And the 78.5 to 84.5 area would be a good spot to buy. I am going to make a copy of the zone and set this up as a daisy chain as well. And I'm going to change the targets here on the 65 quarter. I think that if we go down there, the market's going to be in a very weak state, and I wouldn't really look for much more than 43.99.5. So 71.75 would be needed to get 3R. Let me change this to 09 quarter. And so 72.5. So over here, I'm going to put my stop at 72 quarter and see what that looks like. And again, this is simply a preparation exercise. It doesn't mean that we have to stick with these targets. We might need to change them in real time. But 78.75 back of zone entry, stop 72 quarter. This would be a very conservative and safe way to execute these zones down here. So that's going to be a wrap on support on the downside. Now, in the event that we head higher and we go into 64 to 70 or 75 half to 85 half, I think there could be a good short at 75 half to 85 half, but we need to be mindful of the fact that buyers would be dominant as the market's heading up there. So as far as our targets go, I don't think we can look for really a whole lot off of 75 half to 85 half. I don't think we can look for example, a move down into 39 half here. So I'm going to change the high probability target here to 69, and I'm going to change the final target to perhaps 64, because I just don't think we're going to get a huge move off that area, and I'd rather play defense. So 82 half would give me 3R, and I need to be even more careful at 64 to 70 because holding above 47 to 55 is an intraday bullish indication. So in this case, my high probability target is going to be 55 and the final will be 55 as well. So I would need an entry at 69.75 to get 3R. So that's a potential trade, but only if the market's exhausted into that zone. The safer short would be at 82 half, and in the event that we get exhausted into 89 quarter to 96 quarter, I think that would make for a good shorting opportunity as well. And we're going to go ahead and use the same targets over here. So a 91 entry down into 64 would give us 3R. Again, anytime our short-term bias is neutral, we need to be mindful of how the real-time situation is shaping up. And whether I take these trades or not will depend on how the market approaches these zones. So if the market is exhausted into 75 half to 85 half, I would be much more confident taking a zone fade there, and at least a reaction at that zone would be relatively high odds. And as long as I can get my scale out, I can manage my risk very well. So as soon as that first scale gets hit, our risk gets reduced by 50%, and that makes it much easier to manage and hold a trade for some of the other targets. So if you want to play defense, focus on whether your initial scale out is a high probability target. Is it very easy to hit? If it is, and the market's exhausted into your entry, it's quite likely that your scale out will get hit. And then from there, you may tighten up your stop to reduce your risk even more. So it becomes a situation where when the trade doesn't work, you might end up losing half an R or a third of an R. And when it works, you might end up getting 2 or 3R. So again, it's going to depend on how the market approaches that zone. And I'm much more confident in shorting the 75 half to 85 half area. And I'm going to be much more cautious at 64 to 70, simply because holding above 47 to 55 is an intraday bullish indication. And even with an average range, we could hit 75 half to 85 half. All right, guys, that's going to be a wrap on the trade planning exercise for today. If you found this content to be helpful in your own trading and in your own pre-market planning process, please like and share this video with other traders. Aside from that, good luck and good trading today, and I will catch you in the next one.